Jace, what do you think? Are you long the market overall here? Are you short the market? What do you think about these wild swings we've seen?
Becky, I'd be more inclined to be short than long here. I mean, if you have a intermediate to longer term perspective, which means months to a year, something along those lines. Next week or so, the Lord only knows. I think there's been a big short covering rally, but I think the fundamentals are really setting up for certainly more volatility, and I would say probably a lower S&P 500 when all said and done. If you look at profits, economic growth, the Fed, monetary conditions, all the rest of it, I still think it's a very tough setup.
Are you concerned about things getting stretched in the market, things getting broken, or you're just looking at this from the Fed not being done with raising rates and the market just getting hopeful about that being the narrative here?
Yeah, I mean, I think the first thing I would say is it's a strange circumstance when people are praying for a financial crisis to get bullish on equities. I think that's worked. I mean, that has worked. You can't blame people. But I think the problem now is that inflation is sufficiently high and stubbornly high enough so that the Fed, I just want to say to investors, it's not about you. The Fed, I think right now, they've made it clear their focus is on price stability. They got started a little too late after the pandemic. And now the main focus, really, they have a single mandate, which is to get back to lower inflation. And so wherever the chips may fall as far as the financial markets, I think is where they're going to fall. The thing that you have not seen yet, if you think there's a decent possibility of recession in the next 2 years, which we do, have been lower earnings. And so in a typical recession, earnings fall 30% on average. The median is 22%. That would give you earnings per share in the S&P 500 of about $200. And you could do the math in terms of whatever multiple you think that is, 15 times, 16 times. But that gives you something more like 3,000 to 3,200 on the S&P 500. We're not going to get there all at once. But, to me, that's kind of where the trend is until I see some sort of meaningful change in the basic building blocks of what drives shareholder value.
So, Jason, if you're correct that the Fed has a single mandate right now, that is purely getting inflationary costs down, and I think you're probably right. If that's the case, we're going to be looking very closely at the jobs report tomorrow. My guess is that if the number is weak, the market will rejoice and think that the Fed's going to ease sooner rather than later because the job market finally looks like it might be turning over. But if you're right that it's only inflation that matters, those would be false signals.
I think so. And again, I'm not a trader, so I wouldn't stand in front of it. But I think what we're trying to tell people from my perspective, we have Chris Verone and a technical team here. They're very good at getting the short-term swings right and helping people get those right. But from my perspective, the fundamentals would suggest that you are likely to go lower. And I think that, again, the Fed is not particularly worried about the financial markets. I know it seems like they are because they have been since it was the Greenspan put, then it became the Bernanke put and the Yellen put and the Powell put, but there's no put right now. Is my opinion until you have something that changes the fundamental outlook for inflation, and that has remained sticky for a variety of reasons.
Very quickly, in 20 seconds, what would you buy, if anything, in the equities market? Is there anything that's immune to this?
We like it. We like energy a lot. And I know it seems incongruous with the expectations for recession, but in our opinion, there are structural reasons, particularly our environmental policies globally, that are causing a structural shortage in oil and natural gas. And you layer on top of that OPEC plus, it seems to me that energy is going to continue to outperform as it has for the last 2 years.